What's up, everybody? This is Lamine from investingsimplified.net. Today is Thursday, May 20th, 2021. Today we will show you why we believe the lows are in for major indices and S&P should start to move to new highs over the next few weeks or months. We will look at ES daily, NQ, dollar index, and wrap up the technical review with oil. So stay tuned for more details. All right, folks. So let's take a look at the daily time frame of the ES. Looking at the market structure, clearly there is nothing wrong with this chart. We are in a clear uptrend since COVID lows last year. The only major pullback we had was from September to November. We had about 10% correction. Market went about its business. We had some minor pullbacks along the way. These were the largest pullbacks. This was about 7%. This was about 5%. This is about a little over 4%. This most recent pullback we are currently monitoring. And we believe the lows are in as of yesterday. One of our internal models suggested to us that the lows are probably in as of yesterday. Looking at the downside volume at the open yesterday was one of the indicators that we monitor. And now market is trying to break above this downtrend line. If you look at the structure here and the structure here, they're pretty similar. Looks like a wedge. So any clean break here will suggest it to us and confirm our thesis. Likelihood of S&P running to new highs, that probability will increase day by day. So our upper end of the target range will be anywhere from 4,300 to 4,500. However, if things don't play out as we anticipated, let's say for some unexpected event, some catalyst, negative catalyst comes in, causes market to roll over, this would be the key level, 40-20 to about 40-50 zone. Below this most recent lows, that probabilities will increase that market is going to go even lower. Initially, when this trend line was tested, we were forecasting anywhere from 5 to 10% pullback. Market only gave us 4%. We are content with that. So we'll see as market continue to grind higher. At any point in time, we test this trend line, whether that's at 4,200, 4,300, 4,400, or 4,500, we will start to de-risk and look for bearish opportunities. So let's jump to NQ and see where key levels are. All right, so let's take a look at the NQ. This is NQ daily time frame. As we can see, we are in a clear uptrend, no violation whatsoever. This trend line, this is the third time we have been testing this trend line, and it looks to us that market has found some kind of a support or bias around this level, and we kind of breaking out today. If you look at this downtrend line from this 7% correction, we broke the prior support level that acted as a resistance for a few days. Market cleared that today. There's a possibility we could backtest the trend line and then ultimately move higher. We don't know what market is going to do, but we will continue to monitor day by day. We will look at key levels on a lower time frame, like 4 hours and hourly, to see what market is really telling us. But we believe that the lows are in, and for NQ, we will just pay attention to this key support level that market just put in and the trend line. In the event markets NQ start to roll over, the trend line cannot hold, and this most recent lows cannot hold, then at that point we will become more defensive. But for right now, we believe it's risk on. We expect market to go to new highs. NQ anywhere from 14.5 to 15,000 should be our next target. Our indicators are pretty much in the neutral zone. RSI is in a neutral zone, and MACD is approaching the buy signal, but we don't use indicators for any timing. We just look at indicators as a confirmation. So as long as the technicals continue to hold, eventually these indicators will catch up with price. But if you want to wait until you see a buy signal here, you probably will be late and your risk reward might not be as favorable. So we initiated some positions around this choppiness here, and we'll continue to hold. So let's take a look at the dollar index. All right, looking at the dollar index, technically it's in a key interesting level. It's an inflection point. This 89 to 90 zone, we think dollar index needs to hold here. Any meaningful break that will put a lot of pressure on the dollar index. So we continue to monitor the situation to see which way dollar would want to go. As you can see, we're consolidating around this key level for about 3 days now. So which way it's going to break remains to be seen. This 3-day consolidation, if we break down, we could come to this lower end of the support. And if we happen to take this highs out, maybe dollar can get a little bit of a relief to move a little bit upside. Look at fundamentally, we are bearish on the dollar because of what Fed is doing as well as what the physical side is doing. Looking at the current account deficit, we believe all that should put some kind of a downward pressure on the dollar. And if dollar continues to go down, which should help commodities, especially metals, gold and silver. So we'll continue to keep an eye on this. Our indicators are pretty much all sitting at MACD is neutral and RSI is just consolidating right around the oversold level. So with that, let's take a look at oil market and then we will wrap up the review. All right, folks, so let's wrap up the review with WTI crude. This is the daily time frame. As we can see, since back in November of last year, the trend has been up. However, the trend got violated in March. We broke this rising trend line. It was a significant down day. Market chopped around for about 2 weeks, rallied, retest the highs. So now, looking at this market structure, it's clear to us that we are in a trading range between low 57 to upper 67, 68 range. As long as market remains in this range, our strategy is to sell any rallies and buy any dips. And this retest, as we can see, market chopped around here for about 2 weeks. We are getting a breakdown today. So this gives us a high probability scenario. The likelihood of crude coming down towards this 57 range is highly likely. There's a possibility we can find support right around the 60 level and then eventually bounce. The probability is there too. But at this point in time, as long as 63 holds, we expect crude to come down, potentially test this zone. If that happens, we will pay attention to RSI at that point in time to see if RSI is oversold. At this moment, it is not. It's sitting right in the middle zone. So if market continue to come down, RSI become oversold, and we see rejection candles once this support level get tested, then that will be enough for us to put on some risk and push the market back to the prior highs. So our strategy, sell any rallies and buy any dips until we get a meaningful break to the upside or to the downside. So with that, we will end the review here. If you enjoyed this video, please like, subscribe so YouTube can push this to more audience. And if you really want to know more about our detailed research, please go to investingsimplified.net and send us any questions or concerns that you may have. With that, I hope you all have a great evening. Bye for now.